Recording. So, welcome to our weekly analysis class. So, as you all know, first of all, what we actually do on every week analysis is we trying to understand the direction of the market on what we'll be expecting the coming week. Every week has its own trading analysis. Today, you might see a buy on a particular trade for this week, and next week you might be seeing a sell. So it depends on um, as day traders or as people who can actually hold trade within the week, what we are going to be looking out for a particular week or every day. So now, first, what we do is we analyze what we call the DXY. DXY is what we call the dollar index. That's the first thing I have to analyze. Why we say DXY is based on DXY. Okay, we have DXY already. Why am I not seeing it here? Okay, we have DXY. So why I said DXY is based on that DXY is dollar index, and what we mean dollar, it means the price of dollar. Now, as you know, trading, most of the currency pair we actually trade in forex market is tied to United States dollar, which is the biggest currency being traded. In fact, any currency that has USD as part of its pair is always known as the major pair. So you could see the impact USD always have on the forex market. So since we have that, what we'll be doing is we have to be analyzing the DXY to know the direction of the market. And another reason why we analyze DXY is based on if we know the directional bias of DXY, hopefully we say when we have DXY, when we have DXY this way, when we have DXY, we could see that since it's a dollar index, it actually shows the movements of most of the market pairs. Let's say, for example, we have Euro USD, Euro USD, Euro USD, which is a currency pair. Now, since we have Euro USD, having the fact that Euro now is our base currency on this market, and then USD is our quote currency. Since we have USD as our quote currency, that means any direction that USD is going to. Let me accept this person. So since we have Euro USD and we have USD as our quote currency, meaning that if DXY is buying, that means Euro USD is definitely going to be selling. Let me admit more people.
Thanks.
If Euro USD is buying, if Euro USD is buying, that means DXY will be selling. Or if DXY is buying, Euro USD will be selling. Why? Because we have Euro as our base currency, which is just more like the foundational currency, the main currency holding the pair. Now, let's say, for example, we have something like USD SD JPY. And since we have USD JPY as this currency pair we have as USD JPY, since USD now is our base currency, since USD is the base currency, which is the first currency that is trading against this one, since we have this as our base currency, that means if DXY is going up, is trending upward, USD JPY will be trending upward because USD is the base currency, just as we are seeing here on this market. Since we are seeing that this market is pushing upward, now let's see what USD JPY will be doing. Now, if you go to USD JPY, you will see that USD JPY too is pushing upward. And then, since if you get what I explained correctly, since DXY is pushing upward, and then we have a currency pair like GDP, GDP USD, GDP USD, having our USD as the quote currency. In this case, now we have the USD now as the quote currency, and this as the base currency, which is B, and this as the quote currency. Since we have USD as the quote currency, what it actually means is that if DXY is going up, GDP USD will be going downward, which we can actually see here that GDP USD right now is pushing downward since the DXY is pushing upward. So with this explanation, let's dive into trying to analyze DXY. Now, analyzing DXY, we can't trade DXY. What we are using DXY to do is to know the directional bias of the market. We use DXY to know the place we can be able to take trade, and to be able to compare other markets and see the direction we are going. Sometimes you might see Euro USD doing something else that you don't understand, but based on your analysis on DXY, you can be able to know the direction of Euro USD, GDP USD, and USD JPY based on the direction of the DXY, the dollar index itself. So now on the dollar index, what do we have? First, we could see that first we want to do a top-down analysis, which is our usual analysis. And what we could see here is that around this area, we could see that here we are trending upward. We have been trending upward. In fact, we have all these buying weeks. You could see for about 7 to 8 weeks we have been buying, and then we have just one selling, 1 week that market actually sold, and we continue buying. What I'm seeing in this market is that here we have this big resistance level around here. As you can see, the resistance level came up to this level, which a lot of people might be thinking of selling this market at this point, but that's not going to be the case. If you want to sell a market, especially on the higher time frame, what you should be waiting out for price to do is at least to push up to at least half of the 50% of the zone you have before you be thinking of any selling momentum. And as far as we are not having any change of character in this market on this weekly time frame, let's say this area we have here, this price has not come down to this area, give us a change of character at this area, and then look for an order block or imbalance that is going to make it in order to give us that sell-off. As far as market has not actually given us that, we are not going to be looking at selling this market. What we'll be waiting out for is we are looking on to continuously buy this market up to this point, or even up to this indecision candle we have around here, because this is where price is likely to react from. When I mean indecision candle, for those who have actually been trading with me, will understand what indecision candle is. But I'll have to explain it again for the new ones right here. Now, when we talk about indecision candle, we are talking about a candle that is like this. A candle that is like this. You have a candle that is like this, and it's just more like a cross. And when we mean cross, what do we mean? What really happened in this candle is, to explain this properly, price started, opened at this price, and when price opened at this price, as you can see, sellers actually took over the market, and then the market started selling. And when the market started selling, you see buyers come into the market and then pushes the market upward. Now, since buyers pushes the market upward, there's now a fight between the buyers and the seller. And what happened? The price ended up closing at the middle. And when the price ended up closing at the middle, it means that nobody has the major strength in the market. It's more like a buyer-selling market, and then price closes at the middle. And this is just the explanation we have as indecision candle. And when we talk about indecision candle, it is a candle whereby market is more likely to react at any time frame. In fact, if you see a trending market or any market coming to an order block or currently an imbalance or anything, you see that most markets are more likely to react from when we have something more like an indecision candle. We'll still go to the market and you see more of that. Just look at this area now. We could see that price came here and reacted at this indecision candle around here. You could see we have indecision candle around here, and that's exactly where price reacted from. If you still go down to the market, you'll be seeing that we have more indecision candle that price currently come to the market to react. Price reacted at this indecision candle around here. You could see another one here whereby price reacted off from. You see this one here, price reacted at this indecision candle around here, and all that. It goes all that way. So now, if you can see, we have this one right here again, this little indecision candle. You could see that market came here, react. There must be a reaction at every indecision candle. In fact, there was a time where I was doing in more of the lower time frame. I'll be waiting for price to get to an indecision candle, and then I will take a buy or a sell in that market, and then I'll just target a few pips. I'll put on big lot size, and it was helping me for a while. But I tend to try to get other ways I could be able to trade that will be profitable for me, and then I have to abandon that particular trading system. So with that being explained, what we now have is that, as we're saying, we say that we are hoping that market is going to come to at least 50% of this our zone here, which is around this level. So in our weekly time frame, what we are looking out for is to buy this market. Now let's go to our daily time frame and see what we have. Now on this daily time frame, you could see that we are still currently on a buy market. Now clearly, even a layman will understand that this is a buy market. Even with your trend line, you could see that it's a buy market. And what do we use to understand a buy market? A buy market is where we have a trend that is respecting the Dow theory. And what we mean by the Dow theory, we mean that a trend is still going to be in a particular direction, which is we having a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Here we created a higher high, unless there is a breach or there's a change of character in that market, which will give us a change of direction in that market. That's where the Dow theory has been breached. But since we still are in a very bullish trend, which is an uptrend, we are still going to follow this trend until we get to this point right here. And since this is a daily time frame, what we are looking out for is around how many pips. Let's think of how many pips we are looking out for. You could see that we are looking out for over almost 3,000 pips in order to get to this level, just from the daily time frame to get to this level. So since we are looking out to buy this market, now we'll go to our 4-hour time frame and look at what we have. Now on this market, what you could clearly see is that first we have seen the trend on the daily time frame. Now what I want to let you guys know about trend is that when a market is trending, if you should go down to the lower time frame, you're going to be seeing more things like noise in the lower time frame. If you get your directional bias in the higher time frame, the next thing you have to do in the lower time frame is to go and check for where we have liquidity, because in the market, if you don't know about liquidity, that means you're still a newbie. Market always goes to target liquidity. Liquidity is always the target in the market, and once liquidity has been taken out, you see the market goes into the intended direction it wants to go to from the beginning, from the initial point. So with that being said, since we already knew our trend here on the daily time frame, let's draw the trend again. Since we already knew the trend on the daily time frame, and then we can remove this now, we could see that our trend, we have this high over here, we have this low, we have this high, we have this low, then this high was broken to get a new high, and then we have this low, and then you could see that what price did now is that this high now has been broken. As you can see, to some people, they are going to say that since this the high wasn't broken with a body close, that it's not a new high yet. But one thing I want you guys to understand is, if you're going to the lower time frame, more of the lower time frame, when you go more of the lower time frame and then you see things like that, then you could be able to understand why you could use body close. But with all that is happening on this higher time frame now, you could see as this time frame is very, very big. With all that is happening on this higher time frame, if there's a body close in the lower time frame, you see that it's very, very visible on the lower time frame. But here on the higher time frame, it's not visible. So what I'm just trying to say is that in the higher time frame, all those stuffs doesn't count. It doesn't count since you are in the higher time frame. But when you go down to the lower time frame, let's go down to like the 30 minutes time frame, you will see that there are lots of body close around here. You could see that there's a close of body in this area. There are still closes of body close in all this area. So if you are going to be saying that on the lower time frame that this is valid on the lower time frame, and then going to the higher time frame you are saying it's invalid, that means you're not actually making sense. That's why I said, if you are talking about the higher time frame, as far as the candle, even though it's a wick or a body close, it's a valid change of character or change of direction of the market, or continuation of trend. So now, with that being said, please, can you turn off your mic, please? That's Peter Jacob. Can you turn off your mic, please? So with that being said, on our 4-hour time frame, we could see that there's a break of structure here already, even if it's a weak it is a weak break of structure. So what we are looking out for this week is for price to come down and give us
Ah, Semo. Oh, I
Peter
Semo
Jacob,
now.
please turn off your mic. Oh, let me mute him first. Okay. So now, since we are looking at this, what we are going to be considering is for price to come to this our previous demand area, which you can be able to see around here. We have this demand area around here. So this is where we are going to say it's our major point of interest for price to push up and then come to our demand area here. But we can't actually see this clearly except we go down to our lower time frame. That's where we come to our 4 hour time frame. So here on the 4 hour time frame, first what you could see is that we have our demand area. We have our demand area right here. And since we have our demand area, what we are trying to do when we are doing a top-down analysis is for us to narrow down in order to get a more perfect entry, more like a sniper entry. Now you will say that if someone wants to take a trade here and the person is trying to say, okay, let's take a buy from here and our stop loss around here, and then you could see the pips you are having around here. It's not a good pips, right? It's not a good pips. Why? Because this is a very big stop loss. So what we are trying to do is to try to narrow down our stop loss in order to get a perfect entry. So with that being said, what I'm looking out for this trade now, since we already know our directional bias of the market and we already know that this is our previous demand zone, that if price breach this area, sorry, let me accept this person, anything that makes price to breach this low right here that we have, that means we have a change of character in the market. And as far as that low has not been breached, that means our directional bias still continues. So with that being said, what I'm going to be saying is that I'm going to be narrowing down my entry down to this level, Why? Because what I'm seeing here is that I'm seeing this liquidity around here. You could see this liquidity around here, which all these places now are liquidity, which price is definitely going to come and take out this liquidity. And what I always tell you guys about liquidity is that as soon as a liquidity has been taken out, the next zone is going to be the most snipe zone or the most probable zone for price to actually push up from. And since we already have this liquidity around here, the next zone I'll be looking out for is for price to come down to this zone here, break this low around here, come down to this zone, give us our entry, and then we continue buying this market. So my analysis for DXY is still on the buying side of the market, and then we have this, and we could see that we could take price down to the 50% as we said on this very market in order to continue for giving us a 1:10 ratio. But that's when the market opens. We are going to be waiting out for that. So our analysis here stops in the 4 hour time frame. So since we already know our bias on the DXY, which is the dollar index, we now go to the next one we have to analyze, which is our analysis proper. Now we go to the DXY. Now, as I explained to you guys earlier, I said DXY is buying. That's why we have Euro GDP USD selling. Why? Simple textbook analysis. We could see that we have GDP USD. Since we have it USD, we could see that this is the base currency. And since this is the base currency, that means it will be going inverse to what the DXY is going. Except we have USD as our base currency, that's when it will be going in the direction of the DXY. But since we have GDP alone as the base currency and this as our quote currency, that means it's going the opposite direction to what the DXY is going is moving. So with that being said, we could see that in our normal analysis we already knew that DXY we are actually going to be selling GDP USD, but we just not go and type sell here and start selling the market. We have to do our proper analysis, which is the top down analysis, and then which takes us to our weekly time frame. Here on the weekly time frame, what I can see on the weekly time frame here is first we have been having this trend, which is a beautiful trend. We have this high over here, we have this low, we have this high here, we have this low, we have this high here, we have this low, and then we have this high. And then you could see that we have been respecting the Dow theory, which is the trend theory. And as you can see, when price got to this level, this low we have here, when price got to this low we have here, you could see that this low tends to breach, causing a change of character or market structure shift in this market on the higher time frame. And since we have the market structure shift, that's why this market has been selling. But with that being said, we'll go down to our lower time frame to know what we have. But the last demand we have on this market is basically around this indecision candle we have here, which price is more likely to react from in the weekly time frame. But what we are trying to look out for GDP USD is if price is definitely going to come to this area this week. But with that being said, I don't really think price will come back to this area, because as you can see, we are having this big push of a sell momentum. You could see it's around 369 pips of a selling momentum for last week. And if you should see the normal moving average of the last previous weeks, let's calculate it. You could see that a weekly average is 170 pips. So even though market is trying to go back a little or try to retest in order to continue selling, we could be looking at something around this level, let's say 190 to 200 pips, before markets will go into its intending direction. But what you should be seeing is that we have this big sell around here. I don't think market is going to come back to a particular level in order to keep selling. If not, what we are going to be looking at for next week is market leaving a little week behind and then continue selling. And where is market trying to push us into in this market? Now, as we can see, we have this low. We previously had this low right here. As you can see, we previously had this low where a lot of people actually sold this market. But with this momentum, you will not be telling me that you actually come to this market and try to buy this market. In fact, what do the market makers do? The market makers gave these people a buying momentum. You could see that we have this week of buying here, and then a lot of people who actually had this normal mentor strategies, they'll be like, since we have a pin bar, we are going to be buying this market, and then from here they will be putting the pin bar around here, and then they'll be buying, they'll put their stop loss around here under the pin bar and then target the high. And what do you see? The market took them out. Why? As far as you're looking at momentum in the market, you'll be able to know the zone that price is definitely going to react from. With this momentum coming into this market, a lot of people are still going to be making mistake to put price on this area in order to be able to buy the market. There are a lot of people who might actually have been buying this market because of the feel that price has come to this demand area, and then price has taken out this liquidity here. It's going to react here. But if you're looking at liquidity and momentum in the market, these are two major factors that when you look, you'll be able to know when the market is trying to take a turn. It's just like a moving car. Now, when you say you have a moving car and then you're driving for let's say 120 kilometers per hour, you can't just say you are putting you're just going to put the car in reverse just immediately. It's going to spoil your braking system or your transmission system. What you do is that you slow the car down. You keep slowing the car, applying the brakes little by little to slow the car down before you tend to put your gear in order to take the car or put the car on reverse. With that being said, this candle we are seeing here is going on a very high speed, and that's what we call momentum. Since it's going on a very, we are not seeing slowing down around here, just like this that we saw that markets came down here and started slowing down before we have a push upward or we have a push downward. For this case, we could see that the market is actually pushing with very, very big momentum. And with that being said, we are not going to be saying that price is going to react off this area. If it does react, then we are lucky, but it's not going to react off this area. The next area I'll be looking out for market to react off from is definitely going to be around this level around here. Market is definitely going to react from this level around here. Why? Because we have this as an order block, and you could see that we have multiple touches around here, and this order block here on this weekly time frame has not been dated already. You could see that this order block has been filled already. This one here has been filled already. So the one that has not been filled here is this other block. And as we can see, what we'll be saying is that we are looking out for this market to run down to this area around 820 pips before giving us a buy in this market. Then now let's go to our daily time frame. Now, with that being said, on our daily time frame, what do we have? We could see that the price has been trending downward all from this area. Now we have this high over here, we have this low, we have this high, we have this low, we have this high, we have this low, we have this high, and price actually broke this previous low we have here to give us this low right here. And since we have this low, you could see that here is a break of structure. So the next zone we have right now is around this zone, for a sell. We have this zone now for a sell, but will price come back to this zone on the daily time frame? Probably this week price might actually come and test this zone and then give us a sell, but we don't know yet. That's why we have to go down to our 4-hour time frame to be able to narrow the zone down. So now on our 4-hour time frame, what do we have? Now we could see that on our 4-hour time frame, we could clearly see that we have liquidity around here. And what do we say about liquidity? Now once there's liquidity in the market, price tends to react to the next order or the next order block in the market, which is around this area. So I'll not be saying that anyone is wrong if the person is taking a trade off from this area, since we have a liquidity being taken out around there. As soon as market take out this liquidity and someone puts his trade around here and then take a sell off to where the price actually started moving out from, to get this 1:4 ratio. But what I'll be waiting out for is for price to give me something like this, a trend down, and then give me a change of character around here and started pushing up. I need market to push up to my level, and as soon as markets push up to my level, I want to see market slowing down. I don't want to see a big momentum. If I'm seeing a very large momentum in this area, then I will have to readjust my zone to this level, which is the last previous zone. That if price actually breaks this zone, that means I'm not going to be interested in selling this market anymore. I'll switch over to buy. But this is being my more premium zone. I'll be waiting for price to come to this area, give me a change of character in this area, which is around here. As soon as I have a change of character around here, I'll be looking out for price to go down here to give me to mediate an order block and then push downward. That way I'll be having a more sniper entry on this market, which is going to give me a lower stop loss and a high risk to reward ratio. With that being said, our selling zone is going to be around this level. Either you go aggressive on this zone, or then you have to wait for price to give us confirmation in order to sell on this particular zone, and then you have a better risk to reward ratio on this market, just as I said. So the next one we'll be going on to is going to be Euro USD. Just as we said, Euro USD too, as far as DXY is going upward, Euro USD is going to be selling based on Euro USD is the base currency, and then Euro is the base currency while USD is the quote currency. And since we have that, all I can say is Euro USD and GDP USD actually moves in the same direction. But if I want to be very, 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 very exact about my entry and exact about my trade, I'll be taking Euro USD. But if I want to gain more money or gain more pips, I'll be trading with GDP USD. But it doesn't come with exact prescription, like to be exact in trading and GDP USD. Now, with that being said, Euro USD goes exactly the way you see DXY going, but in the opposite direction. In fact, when you try to compare the both of them, you see that they all move almost the same. If there's a resistance around there in DXY, you see the resistance. Everything works almost the same on Euro USD and DXY. Just that one is going the opposite direction with the other one. Now, with that being said, what we'll be looking out for is for our weekly time frame to analyze this. So where we are hoping for price to come into on Euro USD is going to be around this indecision candle around here, which is a nice order block. As you can see, we have this this demand candle before we have this big move to the upside. So what we are going to be looking out for is for price to come down to this zone. So we keep on selling this market down to this zone, and then you could see that a lot of people might actually have bought this market from here, and then you could see that market took them out. A lot of people would have bought the market from here, and you could see that market took them out. But what do you expect? We could see this big momentum candle coming into this zone, and a lot of people are still going to be buying this market, and still we see this big momentum candle coming into this zone. A lot of people might actually think that, okay, since market has taken this area, here becomes a liquidity, they are going to mark this as a liquidity, and since they mark this as a liquidity, they'll be saying that market is going to react off this area. But what do you expect if market is going to react off this area? You could see that we have this big momentum candle pushing towards this area. A lot of people are still going to buy this market. In fact, the market makers comes into the market, give them the pin bar they have been looking out for, give them the pin bar. A lot of people would have bought this market, and when they buy this market, putting their stop loss just below, what else would they see? Markets will come and still take them out and continue towards the intended direction market is going out for. Why is this happening? When you understand the concept of momentum in the market, you'll be able to understand the direct zone that price is going to buy or sell off from. So now, with that being said, we have already had our zone that we are hoping for markets to come down to. Let's delete all this and just put only our zone. We could see that this is our zone that we are hoping for markets to come towards and give us a buy. And what we are looking out for is for price to at least come to 50% of this zone. Since we already have our directional bias in the market, which is bearish, we should go now to our daily time frame and see what we have. Now, on our daily time frame, you could see that we have this nice trend over here. Now you could see we have a high over here, we have this low, we have this high, we have this low, we have this high. You could see that this low was, we have this low, and then we have this new high, then we have this low, and then price came here, and what you could see is that price took out this low over here. I keep telling you guys, since it's a daily time frame, the low that price already gave us, which is down here, is valid. You could see the low here is valid. Why I said it's valid is because if you should go down to our lower time frame, more of the like 15 minutes or no, that you will see that we have lots of candle that closes just at the area. But since we already have this as our direction, that means we know that the market is bearish at this point. So what do we do when we see the intended market direction, which is bearish? We have to check the next zone that price is going to react off from, and which is this zone around here. We have this zone around here, as we can see. Since we have this zone around here, which is the zone that market is going to react from, but we cannot just say that we are going to put up a sell around here. We cannot just say that we have to put up a sell around here. Since we cannot just put up a sell around here, what do? We tend to look for a way to narrow down this zone, very, very well. And since we are trying to do that, we go down to more of the lower time frame, which is the 4-hour time frame. Now, on the 4-hour time frame, we already know that this is an area whereby if market should take out this high here, we know that we have a change of direction of the market, which I'm not hoping market is going to do, because we are still on a bearish trend, and which is a very strong bearish trend that we are having. So since we are, with that being said, that we are hoping that market will not exceed this high here, what we are looking out for is the next zone market is going to take a turn for. For me, I'll be saying this is the zone I'll be looking out for market to take a turn, around this area here. Why I said around this area here, just like GDP USD, we could see that we have all this on the 4-hour time, we could see that we have all this liquidity around here, which is a trend line liquidity. We can be able to see that liquidity just around here. Let's go to our 15 minutes time frame, and you could be able to see that it's more like a trend line liquidity around here. And as soon as market take out this liquidity right here on the 4-hour time frame, we should be hoping that price is going to come up to this level, in order to take a turn. But what I'll be looking out for, either we are going to be going aggressive on this trade, depending on the momentum on this trade, we are going to be going aggressive. Why I'm saying that price is going to react off this level and not off this level is based on the momentum we are having here. It's a big selling momentum, and with that selling momentum, we are not hoping price is going to anything that makes price to come to this level. Price might actually react from here depending on the momentum. But if price should come to this level, I'm sure that price is definitely going to breach this level. Why? Because it's going to come with a very, very big momentum. So what I'll be looking out for this trade is that price is still going to give me this trend like this, and then give me a change of character, and then try to, that's on the lower time frame, try to come down to this area, and then I'll be looking out for that change of character on this market. And as soon as I have that change of character, I'll be looking for a place that price is going to come and make date an order block or an imbalance, which from that area I'm going to be having my sell in the market in order to reduce my stop loss and maximize my profit. Just when I mean increase my stop reduce my stop loss and maximize my profit, what I mean is, now as you can see this trade, now we have 27 pips as our stop loss, and then you could see we have this 131 pips as our take profits. Since we have this 131 pips as our take profit, you could see that it's a 1:4.89 risk reward ratio. But when we actually wait for confirmation, not an aggressive entry, a confirmation entry, which you could see that here is a one, which is our stop loss is 14 pips, and then you could see that we only have 121 risk reward. But what do we see we have here? Our risk reward ratio becomes 8.2, with even a smaller amount of pips to be taken as our take profit. So this is just example of what I'm explaining as a risk reward ratio, as an aggressive entry and a confirmation entry. Confirmation entry gives you a very, very good sniper entry. In fact, when you can see that the whole of last year most of my trades are sniper entry, is just because of the confirmation entry I actually do before I take my trade. So now, with that being said, we already know our directional bias for Euro USD. The next thing we are going to be looking out for now is for USD JPY. Let's see USD JPY. Now, on our weekly time frame on USD JPY, we could see that price has been buying, and since price has been buying in USD JPY, in fact, in this area we are currently looking at price coming to react off this area. You could already see that price is trying to slow down a little around this area, which now first thing you have to see is that a lot of people might actually be thinking about selling in this area, but you could see the momentum price used to come to this area. Now you could see the momentum, this momentum. What makes you think that price is going to react off this area? It's not possible based on this big momentum price is using to push up to this area. But with that being said, now as price is coming to this area, we could see that price is already starting to slow down, and since price is trying to slow down, price may likely react from here. Even though price is trying to break this area, price is likely to react from here, give us an amazing piece, more like a 300 pips before actually breaking this area. So our point of interest is going to be around this area, whereby we are looking out for price to come into. Let's see how many pips that should give us. Around here to here, that's around 359 pips. So now let's go down to more of our lower time frame, which is the daily time frame. Now on the daily time frame, what are we having? First, what I can see on the daily time frame is that we have a liquidity around here. You could clearly see this liquidity around here. The price is definitely going to come and take on this daily time frame, and our next zone is going to be around here. I'm looking out for price to come down to this zone, but I have to narrow it down. That's why I have to go to our 4-hour time frame. Now on the 4-hour time frame, what do I see on the, let's add someone in. What do I see on the 4-hour time frame? On the 4-hour time frame, all I can see is that we have this indecision candle around here, which is a very, very good candlestick for price to come react from after we have these two as a liquidity. So just think about when price is going to take out this liquidity, and a lot of people actually take trade from here. I'm thinking that price is going to react from here, which is an order block. But now we knowing how price moves, and exactly and knowing how USD JPY definitely moves, we understand that this could be a liquidity for price to reach, for price to come down and attract this area around here in order to give us a buy. So what I'll be looking out for is for price to break this zone, still give us that confirmation to the downside, and then make this our area before pushing up to this high. So my I'm going to be taking an aggressive entry right on this trade. Why? Because we are having a smaller stop loss. 50 pips stop loss on USD JPY is kind of a good one. Oh, Nigeria, it's kind of a good one, and 50 pips stop loss is kind of a good one on this chart, which we have around here. But to narrow it down, I will say that this is what we'll be looking out for this area, and then our stop loss is going to be around here to give us a 35 fee stop loss. So I'm going to be waiting for an aggressive entry on this one. I'm not waiting for any confirmation on this area. As soon as price get to this level and break this area, then I'm out of the market, since I'm not a fan of USDJPY. So the next we are going to be looking out for is gold. Now on gold, a lot of people, I've always been saying that gold keeps buying, and we get people who actually try to sell gold. But what I'm telling people is that if before I was born, which is years back, gold has been buying since this year, even before I was born, 1989, 1985, gold has been buying all to this level. What makes you think that gold is definitely going to start selling now? In fact, there's a lot of demands on gold. A lot of people are buying gold, a lot of people want gold and all that. So since we have all those demands in gold, gold is definitely going to continue buying. And with the way the world is going into, no one is trusting the bank anymore. So a lot of people actually wants to put their money in something they can trust, which is metal and cryptos, which don't have regulations from the bank. In that case, a lot of people are jumping into metals like gold and all that. So since we have gold and we see that gold is buying, now on the weekly time frame, we could clearly see that gold has been on an uptrend, which we are not going to be taking a sell on gold, except we are scalping the market. Now since we don't have much to look out for here, we are going to be looking more at the lower time frame, which is the daily time frame. And in the daily time frame, a lot of people are going to be selling this market right here when they don't understand what we the concept of double top, which is more like a liquidity for us as traders. Now this is a double top liquidity, and they know that people are going to come to this area, take a trade around here. A lot of people are going to put their trade around here and put up a sell on this area, and when they sell on this area, they'll put their stop loss just around here. And what do you see price will actually do? Price is definitely going to come to this area and breach all these people out. Why? Because they don't understand the concept of double top. And since we know the concept of double top, which is around this area, what we're looking out for is for opportunity to buy this area. In fact, price is going to trick these people a little into selling this market, give them that pin bar to sell this market, and then take them out of the market. So what we are looking out for is for price to come and react off this area. And since price, because we have 15 minutes left for this call, so I'll just hurry this one so you can ask your question. So since we have this our pre the most recent demand that we are having, we are hoping that price is going to come down to this area, react off this area, come down, and then be able to breach this area to continue upward. But then we'll go to our 4-hour time frame to see what we have. So here on our 4-hour time frame, we could clearly see that we have a trend line liquidity around here. All these stuffs are liquidity, and since we have all these stuffs as liquidity, and we are hoping on price to come here, and then you could see that this area we are having here now to take our trade align more with where our trend line is. And what we are waiting for now, we are going to take out this zone out. What we are waiting out for now is for price to come back down to this area and give us a buy to this level. So I'm going to be waiting for a confirmation when price comes to this area. Let me delete this. So since we have this liquidity around here, price is going to take out this liquidity around here and come to this area in order to give us a buy. But in gold, what I'm actually looking out for is for price to give me something like this. It's for price to give me something like this, break this structure, give me that downtrend in the lower time frame, come to my point of entry, give me a change of character, and then come back and then react to give me a buy to this area. And then I'll be taking a trade from the confirmation entry I'll be having. When we talk about the confirmation entry, what you people know as the head and shoulder pattern, which here is the previous shoulder, here's the head, and then here is the other shoulder. It's more about a market trend and then a change of direction in the market. That's what your mentors call the head and shoulder pattern. Without proper knowledge of the market, they just see it as a head and shoulder pattern. But with someone knowing fully what the market is, you understand it as a trend moving up in a particular direction. Let's explain it. A trend moving up in a particular direction. Let's say we have an uptrend, and then since we have an uptrend, this trend was breached, and then we have a change of character on this level, and then price comes to an order block in order to give us a sell. Now to other mentors, they'll be like, this is the head, this is first shoulder, this is the head, and this is the second shoulder, and then when markets come this right, they'll take a trade from this level. But with us knowing what we are doing and knowing the direct concept of head and shoulder, which is what we call the change of character kind of trading, where we'll be taking our own trade is going to be around this level, and then we'll be taking our trade from that level. Why head and shoulder pattern, the traders of head and shoulder pattern will be waiting for the neck to be broken in order to take their trade from this area. So when you're having an entry from this area, you could see that you've missed all these pips around here. So if you understand what you're doing in the market, you see that you'll be more precise with the market direction and trend. So with that being said, what I'll be waiting for is that confirmation entry in order to buy the markets up to this point around here. Then my stop loss is going to be around here, and then I'm going to be buying up to this point around here. So that's that for today. If you have a question, please kindly ask so that we can call it a day. We already have just like 10 minutes for this class to be over. So is there anyone who has a question? Do anyone have a question, or you completely understand everything I just explained? You can turn on your camera, your microphone now, please. Do anyone have a question? Can you guys hear me?
Yeah. Yes.
Do you have a question?
This area where you talk about shoulder to shoulder, this thing.
Head and shoulder pattern.
Um, yes, I'm a bit confused in that area.
Okay. Head and shoulder pattern is a kind of trading. You know, normally you understand where we mean that markets moves in trend, right? Now, when price moves in trend, following the Dow theory, we have what we call a trend, which to consider a trend, we should be having new highs being broken, whereby we have like this case, we have an uptrend, we have a high over here, which is an higher high, we have a low, which is a higher low. This high tends to break, and then we have a new high, we have a low, and then we have a new high, we have a low, which is a higher high, higher low, and then price comes to this area. Maybe we meet a very strong order block around here, or maybe price choose to take a turn around here. Do you understand? So as soon as price gets to that level and then change character, whereby when we mean change of character is that the previous low was broken, and if previous low has been broken, that means we have a change of character. What price tends to do next, in fact, this is one of my best way of trading. If I'm trading good on the lower time frame, I always wait for change of character, and I use this pattern to always trade. What price will actually do is, if price change character, it comes back to an order block or an imbalance or anything that price is going to come back to in order to give us a sell-off. And as soon as we have that sell-off, you could see we have that sell-off, and then price is going to change a new trend to give us a new trend. Now let's forget about this new trend. What we are looking out for now is, if you check what we call head and shoulder pattern, you can go online, you see that there are multiple ways of taking trades in the market, which some people will say we have double top, we have triple top, we have head and shoulder pattern. Now a lot of people consider this as the left shoulder, this as the head, and this as the right shoulder. And since we have this head and shoulder pattern now, people see it as a confirmation entry to take trade, whereby they feel like when the neck here is broken, they are going to take their entry to continue selling the market. But if you understand the real concept of the head and shoulder pattern, you just understand that there's nothing serious about the head and shoulder pattern that is not just a change of direction in market structure, which we actually have here, that we have this trend moving upward, and then there's this change of direction, and markets came down here to react to an order block or an imbalance, which take a turn down to give us that head and shoulder pattern. So it's just more about understanding the direct concept of the market and nothing else. I hope you understand what I just explained.
Yeah. Yes, yes.
Does anyone have any other question? So without any other further question, we'll be calling it a day, and the comment section is open for your review. Thank you guys very much for joining, and do have a profitable week. Thank you.
Thank you. Thank you so much.
Thank you. OBS 50 minutes.